traders. I'm Dennis Dick, and welcome to Premarket Info. Joel's away here this morning. He might come in for the back half of the show, but you'll start off with me. We're going to take a look at the technicals on a lot of your S&P's top components here. Looking at the rally from last week, will this continue? Yahoo dumping BlackBerry this morning. Some more bad news for RIM, as Yahoo is going to be switching over to either the iPhone or the Android. We're going to look at some key upgrades and downgrades. And Facebook continues to rally and build on yesterday's or last week's rally here this morning. The market had a heck of a week last week, rallying up. Obviously, QE forever was the stimulus for this rally. We can look here and just see how we had this huge rally up here back a couple days ago when Bernanke came out and obviously said that QE would continue on here indefinitely. We consolidated there for a few hours and then we spiked up again. We're back down here in that area and we are trading down a bit here this morning at 1455. Joel was highlighting that he thinks this 1450 is a critical area to hold. I would agree. We touched it right back here. Below there you have a lot of air. So we've got air above, we've got air below. Key bogey that I would use on the overall market is this 1450 area. More good news probably for Apple or possibly Google, as Yahoo has come out and said that they were going to not use their BlackBerries. Their employees won't be using BlackBerries in the future, that they need to use phones that their customer base is using, and their customer base isn't using BlackBerries. So obviously not good news for Research in Motion again. It's trading down a bit on the news. I mean, Research in Motion though, just been a dog. It came up here a couple days ago, got into the $8 area again, pulled back a bit. We're back at 743 here now. Not much to say on this one. Obviously, we've been very bearish this stock for a long time. I don't really see any reason to come out here and buy the stock. If it could ever get above that 849 area, maybe you could argue it a bit, but the fundamentals are just too poor there, and the stock continues its road down to possibly zero. Apple is trading up here again this morning. So down, the market's down $3, but Apple bucking the trend here once again, up at $4.34 here after a heck of a week last week. Stock got up to as high as 696.72. It pulled back a bit from there, but now we're up there again. So it seems like 700 is inevitably going to be hit here eventually, possibly today. Got a few other ones to talk about here. Well, just continuing on with the Apple theme, AT&T came out and said that iPhone sales of the iPhone 5 have set a record here this morning. AT&T actually trading up a bit on that news, 37.39 after closing at 37.26. We've had this whole sector rotation thing happening again, where some of your defensive issues are selling off and some of your other issues that are a little bit more risky, like your financials, like your tech stocks, some of your commodity stocks have been rallying. So you see how this whole sector rotation thing that was happening on Friday. AT&T and Verizon were victims to that as they sold off pretty well. Johnson & Johnson was another victim as that stock sold off as well. One stock that did buck the trend was Procter & Gamble. It held up fairly well, but there's a big 69.50 level that's got some big institutional selling pressure that might put a cap on the rally if Procter & Gamble is to rally today. Let's look at some individual upgrades and downgrades here. You've got Wells Fargo getting a downgrade at Stifel Nicolaus. Obviously, Wells Fargo was a recipient of a lot of that defensive cash that's moved into more riskier assets. And Wells had a heck of a run there, 2-day run where it was bottom at 34.14 on Thursday morning. Got all the way up. This is a huge run for a stock as big as Wells Fargo, up to 36.60 before pulling back to close at 36.13. It is pulling back a bit this morning on the Stifel Nicolaus downgrade, but this is one of those setups where I always like stocks that have been breaking out and then they catch a downgrade. Sometimes that can give you a good opportunity to get in a good stock at a cheaper price. And this morning we are seeing a bit of that as the stock is pulling back to 35.80. So just in my own opinion, I think this might be one of those downgrade scenarios where it might be actually a good reason to buy the stock. International paper getting downgraded at Longbow. The stock is trading down 40 cents here in the pre-market at 35.10. We've got Tesla Motors. This one is flying this morning. Morgan Stanley upgrading the stock. It has a high short interest as well, so probably adding to a little fuel to the fire just because too many people are short the stock. 32.81 up 8% here this morning. Stock breaking out over these 31.30 critical resistance area. It's kind of into this whole gap area here, so this stock's got a lot of room to run in both directions. JP Morgan bearish on a couple of stocks this morning. First one is US Steel. 21.65 down on the JP Morgan downgrade, so it's trading down about 70 cents here this morning. Pretty big move down for US Steel here. Got into this whole resistance area once again, bounced off support. This one's just kind of been range trading for the last month and a half. This 18 area has been support. Got up to 24 here back in early August, pulled all the way back to that 18 area, getting as low as 18.29 on September the 5th, and then in the last couple of weeks has run all the way back up, getting as high as 23.31. So obviously the upper end of the range here in the mid 23s, lower end of the range down here at 18. Pulling back here this morning, kind of stuck in the middle, so I probably would sit on my hands, hope for a rally, and if the stock got back in the 23 area in the next few days, maybe I'd try a short on it in that area. CLF getting downgraded by JP Morgan here as well this morning. Stock is trading down $1.50 at $44, closed at $45.55. This stock has been on a tear too. A lot of your commodity stocks have really taken off in the last couple of weeks, and the stock is pulling back here today. Obviously, $40 is the big support level. We're quite a ways off of there. We're not going to see that today. If it was ever to migrate back down to that level, could be a decent buying opportunity. But this is another one of those stocks that's been breaking out. You're getting a downgrade. It's pulling back a bit here on the downgrade, so you can buy a strong stock on some weakness is sometimes not a bad idea. Intel getting downgraded at Longbow here. Here's an example of a stock that has just been weak. This market has been on a tear. Intel can't find any buyers at all. Can't seem to sustain any type of a rally. Stock obviously lowering guidance there a few weeks ago, which is why the stock sold off here in early September. Tried to bottom here in the 23 area, but still kind of just hanging out considering how strong the market has been. Very poor relative strength in Intel, so hard to be a buyer of a stock like this. If you are picking bottoms on it, obviously 22.83 is your bogey. That's the low of the move. If it takes that out, I would not want to own the stock long. Office Depot, which is another dog, but has been taking off here in the last couple of weeks. Now it's getting more good news here today as Value and Investor, or the Starboard Value, is unveiling a 13.3% stake. They sent a letter saying that they think the stock is extremely undervalued and management could cut expenses to improve performance. So this stock has just been on a tear though. $1.50 was trading at right in early September, end of August. Went on a run, consolidated, another big move, little bit of consolidation, moving up here again, $2.64. So another one of these has probably got a huge short interest in it. That's driving the stock higher as well. But I don't think this is one I would be buying. I think it gets up in this $3 area, probably finds more sellers. Long run, I'm just not in love with this company whatsoever. FedEx reports earnings tomorrow. So that could be a stock that could be a mover here tomorrow morning, they report. Stock is trading down a bit here this morning at 89.56, but really been range bound as well. So for you after hours or traders or pre-market traders that like to trade these earnings announcements, you need to be cognizant of these levels. 86 on the downside has been great support. If you look back into June, had multiple lows in this 86 area, and then cut through a little bit in early September, but has rallied up. And now looking at, it's like getting into the upper end of the range here, which has been this $92 to $93 area. So if I'm looking at FedEx and you think there's going to be a decent move, this 93 area could be pretty major resistance. The 86 area could be pretty major support. Facebook continues to rally here this morning. building on last week's rally. It's up at 22.44 now. The stock, everybody seemed to hate it 2 weeks ago. Everybody loves it now. It's funny how market sentiment just changes everything. The Zuckerberg conference call has changed everything in the stock from a sentiment perspective. Everybody seemed to hate it before that. Now they all seem to love it. I'm still not a huge fan here. The stock has had a big run, but it is opening up, so it's hard to short a stock when there's just not a heck of a lot in there. We moved down so quickly from $30 down to 20 really in the course of a month, so there isn't a lot of reference points in this area. You do have a high up there, 24.54. And then 24.54 was on the one gap down day back on the 27th. That was a high. We're 2 points away from there yet, but eventually maybe that's where it's migrating to. I'm not sure. Hard to short this one, but now it's hard to be a buyer too, since we were just on September 4th trading at 17.55 and everybody was throwing in the towel. Completely opposite now. Everybody wants to own it and the stock is up at 22.45. So from a sentiment perspective, the stock is completely flipped, which always scares me. I'm always an anti-sentiment trader. When I think everybody is selling the stock, I usually want to be a buyer. When everybody is buying the stock, I usually want to be a seller. The problem is here, though, for me to be a seller of Facebook, I don't have a lot of reference points until you get up into that 24 and a half area. So if you're shorting it here, you could be right, but I still think you're just trying to pick a top. I'd rather use a better reference point if I had one. So I'd like to see the stock tack on another dollar or two before I got interested in shorting it. We do have a merger here this morning as well. IRIS, the medical equipment maker, is getting bought by Danaher, which is DHR, for $19.50 a share. I think that's an all-cash deal, so not much to say about IRS, except good for you if you had it held overnight, because it closed at $13.42 and is trading at $19.40 now with that merger. Danaher is actually trading it hasn't traded at all here this morning, so small acquisition for them. Doesn't seem to be sparking much interest in the stock, but if it does come into play during the regular session, you had support down here at 54 a couple of days or a week or so ago, so you may find support there again. If it took that out, I'd probably get nervous because it could then migrate down possibly to that 52, 57 low that we set back on September the 4th. Just going through a few of the Big Ten. Like we said, we had some sector rotation happening there last week. Johnson & Johnson and AT&T were getting sold off, but you had other stocks like Chevron, CVX that continue to make new highs. ExxonMobil also been breaking out after it broke through those key sellers that we had been talking about at 90, has just been off to the races, trading up at 91.81, so it's down a little bit here this morning with the overall market being down 4, but still moving up pretty nicely. Microsoft's relative strength has not been great, but we have formed this little trend thing here. I'll draw it on there for you. So the trend's starting to look okay in Microsoft, and you have been consolidating this whole 31 area. Eventually we could see a breakout in a stock like this. I'm still not in love with Microsoft because it's so tied into the PC sector still. But overall here, you can't argue with this trend. If you want to be a buyer, you do have some reference points, and this 31 has been a good area of resistance and is starting to come a little bit of support here. So I'd keep an eye on that trend line if you're playing Microsoft. Eventually, if we did take out that high at 31.50 or 31.36 from September the 6th, then we could start to migrate up to that $32 area again. But just with so much weakness in the PC sector, I'm still cautiously bullish this stock. General Electric has been off to the races, moving up. I'd keep an eye on GE, and I'd still be cognizant of all the half and whole numbers. We're starting to get into that vacuum area that we had when we moved down so quickly back in the financial crisis in 2007 and 2008. So the stock moved down quickly through that area, but I think it's going to be a tougher ride on the way up. You have lots of institutions that seem to be dumping at the half numbers and the whole numbers. So first resistance point I would think is going to be the 22.50 area. Then I would look at 23 and then 23.50 and so on. Keep an eye on that when you're making new highs in stocks like this. A couple other ones that we could just look at here quickly. We do have, Apple here I just want to take a look at again. Moving up here, just continues to move up here in the pre-market, so I just want to take a look one more time. Pre-orders are topping 2 million in the first 24 hours for that iPhone 5. 690, 675. It's looks like it's going to make a new high here. 690, 698 was the high from Friday. So keep an eye on that level if you're trading this in early trade. Eventually here it might see that $700 level though. Really, just overall market thoughts here. Looks like Joel's not going to get in today, but we'll have him back in tomorrow. 1455 is where we're trading, down 4 points here on the overall market. Obviously, Joel had sight of this 1450 area, which I tend to agree with. Keep an eye on the high of the move up there, 1466. I still think you've got a lot of people here overall bearish, but you've got to be cognizant that you had a big move here from 1430 to 1450, so there is a lot of air below 1450. So you always want to have a reference point of where I'm going to get out of the trade. If you're trading the market long from this area, I think when it starts to get below 1449, 1448, you might have to reanalyze that trade. Well, that's our show for today, folks. Joel will be back with you tomorrow, and have a good trading day.